Welcome to this lesson. I'm CPA Paul Gaido. In this lesson, we are going to learn about ledgers, ledger accounts, chart of accounts, and control accounts. Kindly remember to subscribe to this YouTube channel, Treatise of Accounting Information Systems. Please watch our previous videos, especially the videos on accounting process, source documents, and accounting journals. In this lesson's objectives, we are going to learn about ledgers, ledger accounts, control accounts, and other types of accounts. On ledgers, we are going to define a ledger, differentiate between a ledger and a journal, various classification of ledgers, essential parts of a general ledger, and various types of subsidiary ledgers. On the ledger accounts, we are going to define a ledger account, various classification of the ledger accounts, classification of subsidiary ledger accounts, classification of general ledger accounts, features of a general ledger account, detailed explanation of a chart of accounts, and discuss the two formats of the ledger accounts. On control accounts, we are going to define a control account, purposes of control accounts, discuss how control accounts works, and various types of control accounts. Lastly, other types of accounts that we are going to cover are representative personal accounts, suspense account, and contra accounts. A ledger is a principal book of accounts. It is a collection of financial transactions accounts. Preparation of ledgers comes in as that process in accounting cycle after the collection of source document and recording of journal entries. The difference between journals and ledgers are: journals are intermediary books whereby transactions are recorded from the source documents before they are posted in the ledgers, while ledgers are principal books whereby all financial and accounting transactions are recorded. Journals group transactions that share common characteristics such as similar source documents, while ledgers group transactions that have different characteristics. Journals contains large amount of raw data, while ledgers contains limited amount of data that has been summarized from the journals. Journals do not have a chart of account, while ledgers have a chart of accounts or a list of accounts. In accounting, it is optional to record a transaction in a journal, but it is mandatory to record a transaction in a ledger. Ledgers can be broadly classified into two, that is, general ledger and subsidiary ledgers. A general ledger is also known as a nominal ledger. It is a master book of accounts whereby all financial transactions of an accounting entity are recorded. On the other hand, a subsidiary ledger is a group of similar financial accounts whose combined balances equal to one specific general ledger account. For instance, all debtors accounts can be grouped together in a sales ledger and their combined balances equals to account receivables balance. The difference between a general ledger and a subsidiary ledger is that a general ledger lists all business transactions, while a subsidiary ledger explains the business transaction and fits a specific general ledger account. A general ledger has a master chart of accounts, while a subsidiary ledger has no master list of accounts since the accounts are created and added every time. A general ledger shows a summary of double entry transactions, where a subsidiary ledger provides detail of summarized general ledger account. Lastly, at the end of an accounting period, all general ledger accounts balances are summarized in form of a trial balance, while subsidiary ledger accounts balances are aggregated to form one specific general ledger accounts balance. The essential parts of a general ledger are the accounting period, chart of accounts, financial transactions, and accounts balances. An accounting period is a period covered by a financial report. The primary accounting period is normally an year, which can either be a calendar year or a fiscal year. However, there can be a secondary accounting period, which can be either biannually, quarterly, monthly, or even weekly. Every financial transaction is recorded in the general ledger on a specific transaction date within an accounting period. Financial transactions that are within the same accounting period are grouped, summarized, and reported together. A general ledger contains a master list of all financial accounts known as a chart of accounts. A chart of account is a summary list of all general ledger accounts that shows whether the account is an asset, a liability, equity, revenue, expense, or drawings. All financial transactions of an accounting entity must be posted in the general ledger. The financial transaction can either be a simple transaction, a compound transaction, adjusting entry, reversing entry, opening entry, or closing entry. At the end of an accounting period, all general ledger accounts are balanced off by comparing the total debit transactions amount and the total credit transactions amount. The resulting general ledger accounts balances are summarized in form of a trial balance. A subsidiary ledger is a book of accounts that provides details for a specific general ledger control account. At the end of an accounting period, a list of all accounts in a subsidiary ledger and their respective balances is generated. The totals of these balances should be equal to one general ledger account balance. For instance, purchases ledger contains individual creditors account. The totals of all outstanding creditors balances should be equal to one general ledger control account known as accounts payable. The various types of subsidiary ledgers are cash book, debtors ledger, creditors ledger, fixed asset ledger, inventory subledger, shareholders register, debt holders register, overheads ledger, employees payroll, manufacturing control ledger, project controls ledger, and tax ledger. We are going to cover each of these subsidiary ledgers in details in separate videos. Please subscribe and hit the notification bell so that you shall be notified when the videos are uploaded. Ledger accounts. A ledger account is a separate record within the ledger that contains specific categorized records of an entity's financial transactions. Just like ledgers, ledger accounts can also be classified into two. That is, general ledger accounts and subsidiary ledger accounts. General ledger accounts contains chart of accounts and control accounts such as accounts receivables and accounts payables. Control accounts aggregate subsidiary ledger transactions. Subsidiary ledgers, on the other hand, are accounts for individuals in the subsidiary ledgers, such as customers, suppliers, employees, owners. Subsidiary ledger accounts can be broadly classified into two, that is, personal accounts and impersonal accounts. Personal accounts comprises of natural persons, that is, individuals such as John, Peter, Paul, and artificial persons, that is, organizations such as Safaricom, Microsoft, Google. Impersonal accounts comprises of real accounts and nominal accounts. Real accounts are accounts for properties, equipment, and items. They comprise of tangible assets such as motor vehicles, intangible assets such as computer software, and contra asset accounts such as provision for depreciation account. Nominal accounts are accounts that affect profit and loss of an entity. They comprise of revenues accounts, expenses accounts, drawings, and dividends. General ledger accounts are broadly classified into six, that is, assets, liabilities, equity, revenue, expenses, drawings, and dividends. The detailed classification of general ledger accounts is covered in our video on elements of accounting information. The basic format of a general ledger account in a chart of account contains account code or account number, account name, the type of account, the expected balance type, whether the account is used in taxation, whether the account is a budget line item, and the status of the account. Account code is a unique alphanumeric code assigned to an account for easy identification. Account name is the specific name given to a general ledger account. The type of the account can either be asset, liability, equity, revenue, expense, or drawings. The type of an account determines whether the account will be used in preparation of the balance sheet or preparation of the income statement. The expected balance type can either be a debit or a credit balance. Drawings, expenses, and assets are expected to have a debit balance, while liabilities, equity, and revenues are expected to have a credit balance. For the purposes of taxation, revenue accounts can either be taxable or non-taxable incomes, while expenses account can either be allowable or non-allowable expenses. For the purposes of preparation of a budget and enforcement of budgetary controls, accounts can either be set as a budget line item or an non-budget line item. The status of an account can either be active, suspended, or closed. A chart of accounts is a list of all accounts in a general ledger. The first page of a book of accounts contains a list of all ledger accounts within the ledger, indicating the account number, account name, and the specific folio where you will find the account. Each folio contains a specific account with the account name and the account number at the top. From this sample chart of accounts, we are able to see the 7 features of a general ledger account. That is, there is account code, account name, the type of account, the expected type of a balance, whether the account is a tax line item, whether the account is a budget line item, and the status of the account. We are also able to see that the accounts are arranged in a chronological order, starting with assets, liabilities, owner's equity, revenue, expenses, dividends, and control accounts. There are 2 formats of a ledger account, that is, vertical format, also known as T account, and horizontal format, also known as columnar ledger account. T account are mostly used in a manual accounting system, while columnar ledger account are mostly used in a computerized accounting system. T account has 3 sections: the top of the T, the left side of the T, and the right side of the T. At the top of the T, we indicate account name, account number, account description, and any other information related to the account. Transaction details and amount for debit are indicated on the left side of the T, while transaction details and amount for the credit are indicated on the right side of the T. These are sample T accounts showing vertical format of accounts. The account name and the account number are at the top of the T. On the left side of the T, we have the date, details, and the amount for debit transactions, while on the right side of the T, we have the date, details, and the amount for credit transactions. A columnar ledger account has 2 sections, that is, header and body. The header contains account name, account number, and account description. On the other hand, the body contains account transaction details recorded in columns. The columns are grouped into 4. The first group of columns contains transaction details for both debits and credits. The second group of columns contains debit transaction values. The third group of columns contains credit transactions values. And the last group of columns contains the running balances. These are sample columnar accounts showing the horizontal format of accounts. The header section contains the account name and the account number, while the body section contains both debit and credit transaction details. The body section is in form of columns showing the transaction date, the transaction details, reference number, debit transaction amount, credit transaction amount, and the running balance. Control accounts are also known as adjustment account or controlling account. A control account is a general ledger account that summarizes a set of specific types of subsidiary ledger accounts. An example of a control account is account receivable, which is a general ledger account that summarizes individual debtors' account in debtors' subsidiary ledger. The main purposes of control accounts are as follows. Control accounts helps in checking the arithmetic accuracy of the ledger account balances. This is done by comparing the general ledger account balances with the totals of the respective subsidiary ledger account balances. Control accounts provides a mechanism that helps in detecting errors and fraud. General ledger accounts are prepared by different persons from the one who prepares subsidiary ledger accounts. Any variance in the balances signifies either error or fraud. Control account keeps the general ledger clean. Only totals of the journals are posted in the general ledger, while the bulk details are posted in the subsidiary ledgers. Lastly, control accounts are used in preparation of the trial balance, hence eliminating the bulk individual accounts from the trial balance. The following are 5 steps that shows how control accounts works. At first, every accounting transaction is posted in both general ledger account and the respective subsidiary ledger account. This is done by ensuring that the totals of journals are posted in the general ledger account, while individual transactions in the journals are posted in the respective subsidiary ledger accounts. At the end of an accounting period, both general ledger accounts and subsidiary ledger accounts are balanced off. The general ledger account balance is compared with the sum of the listed respective subsidiary ledger accounts balances. Any variance between general ledger account balance and the totals of the respective subsidiary ledger accounts balance signifies existence of errors in the ledgers and must be reconciled. Finally, a trial balance is prepared from the general ledger accounts balances. There are various types of control accounts. The main types of control accounts are debtors control accounts, also known as accounts receivable, and creditors control account, also known as accounts payable. Other types of control accounts are wages control account, stores ledger control account, work in progress control account, finished goods control account, overheads control account, equipment control account, and project control account. We are going to cover each of these control accounts in details in separate videos. Please subscribe and hit the notification bell so that you will be notified when the videos are uploaded. Other types of accounts are representative personal accounts, suspense account, and contra account. A representative personal account is an account that indirectly represents a certain person or a group of persons. When an accounting entity has a large number of accounts of similar nature, it is better to group them under one head and open a representative personal account. Examples of representative personal accounts are outstanding rent account, which represents what is owed to the landlord, and salaries and wages account, which represent all individual employees. A suspense account is a temporary account for recording unclassified transactions or ambiguous entries that requires clarification. Any balance in the suspense account signifies existence of errors or fraud in the books of account. At the end of an accounting period, general ledger account balances are summarized in form of a trial balance. In a trial balance, it is expected that the total debits will be equal to the total credits. However, in a manual accounting system, it may not be the case due to errors and fraud. Any variance in the trial balance will be posted in a suspense account. Thereafter, the suspense account will be reconciled to ensure that all errors are eliminated before the financial statements are prepared. A contra account is an account in the general ledger that is related to another general ledger account but has a balance opposite to that of the main account. Contra account ensures that The main account is maintained as the historical value, but it reduces the carrying amount that is reported in the financial statement. For instance, an asset account is maintained as the historical cost, while the related accumulated depreciation account reduces the carrying amount of the asset. The various types of contra accounts are contra asset account, contra liability account, contra equity account, contra revenue account, and contra expense account. Examples of most common contra accounts are accumulated depreciation accounts, provision for bad and doubtful debts, provision for dead and obsolete inventory, purchases returns account, sales returns account, and sales discount account. Thanks for watching this video. Remember to subscribe to our channel, Treatise of Accounting Information Systems. Like this video, leave a comment, and share with others.